Conversations with today's newsmakers from Michiana's Morning News.
And joining us now live on the Newsline, a certified financial planner, Mike Bernard with Korhorn Financial Group. He is one of the hosts of Wise Money, heard Saturday mornings at 9 o'clock, and also the Wise Money Minute, heard Mondays, Wednesdays, and Fridays at 7:20 right here on 95.3 MNC. And Mike, yesterday's 12% drop for the S&P 500 means it's now plummeted nearly 30% since setting a record less than a month ago. Why does the market react so quickly to these news events? And, well, should people expect it to get worse? Good morning.
Yeah. Good morning. Thanks for having me on. Yeah, that's a great question. That is the question. A lot of people have been wondering, why is the market reacting so quickly? Does that mean that this coronavirus is that lethal? Is that scary? And really, the market is responding to the economic impact of all of this. If you think about it, if you wanted to go on vacation, if you wanted to go on spring break, you're now not able to. If you wanted to go to the restaurant, you're not able to. If you wanted to go to a certain conference for your business, there are travel restrictions and so on. And all of those decisions are impacting the economy, and that's why the stock market is responding so violently. If you missed the Wise Money show this past Saturday, my co-host, Josh Gregory, said it as eloquently as I've heard it said, and that is that right now, our health and our economy have conflicting interests right now. For our health, we need to be making changes to our daily lives. We can't just have sort of business as usual. People are working from home, you're eating more from home, and so on. But the economy needs it to be business as usual. It needs people to go to Disney World. It needs people to continue to go out to eat and buy clothes and so on. And right now, the health crisis is more important than the economy. We all need to adapt our behavior and to help prevent the spread of this thing even further. And that's taken its toll on the economy, and the stock market is quickly reacting to that.
All right. Well, considering that, then, should people be making changes to their investments right now, considering it just seems to be getting worse?
Oh my goodness! Now that is the big question, and it really is situational. It really depends. Here's the big message that I would tell you is if you've got short-term money, meaning money that you're going to need in the next year or two or three, even, hopefully that money is already in low risk. If it's not, sit down with your certified financial planner and figure out the right way to get that money low risk, because we've got way too much volatility right now to expect that things will bounce back very quickly for money that you need in the short term. For long-term money, even though this is very scary, I'd encourage you to stay calm and not panic. This too shall pass. I would also, though, encourage you, before you make any emotional knee-jerk reactions to manually change your investments, I'd consider having a system for changing your investments. History tells us that as humans, we just respond emotionally, and if you make an emotional decision now to get out, when are you going to get back in? The likelihood that you'll get back in when things are lower is very difficult. It's very unlikely. So most likely, if you're getting out right now based on emotion, you won't have the emotions to get back in until things are much higher. So I would encourage you, if you're tempted to make some changes, sit down with your certified financial planner and come up with a system. We have a system for our clients, one of two strategies that we manage for them, that has been pivoting to cash weeks ago. And so if you don't have a system like that, I'd encourage you to get one. And I would resist making some big changes just based on your gut.
All right, Mike, what are some other things that people should be doing right now with their money?
Yeah, that's a good question. You know, again, I would encourage you not to panic. I'd encourage you to get a system that has a sell discipline and a buy discipline so that you can capture. Believe it or not, most of our clients are pretty calm right now because we've got a system. And I even got an email this morning from two folks that have asked, well, when's a good time to be buying back in? I got some money that I'd like to buy back in. So that's first. Make sure you've got the right system for your investments and consider the right time to be investing new money. Second, if you've got a mortgage, I'd look at refinancing. Interest rates are as low as they've ever been. Mm-hmm. It's a record low. And so one way to make this downturn in the economy work for you is to capture a lower interest rate on your mortgage.
All right.
So I'd encourage refinancing. And I would also, let me sneak one other thing in here. Yeah, how deep this will go, how long this will last. And so I'd update your budget, which when I said that on the Wise Money Show, Josh said that sounds a little bit like eating your vegetables, telling people to eat their vegetables. But it is. It's important right now. Look at your budget, see where can you make cuts, where do you have margin, what adjustments can you make, because we just don't know. We don't know how far this will go. We don't know how long it will last. So look at refinancing to capture a smaller mortgage and interest rate, and look at your budget to see what adjustments you can make.
Yeah. Now, Mike, when you said vegetables, we're not talking corn on the cob. We're talking Brussels sprouts and spinach. So
That's right.
All right. Thank you so much for joining us today. Again, that was Mike Bernard with Korhorn Financial Group. He's one of the hosts of Wise Money, heard Saturday mornings at 9 o'clock, and the Wise Money Minute Monday, Wednesdays, and Fridays at 7:20 on 95.3 MNC.
Michiana's Morning News, weekdays from 5 to 9 on 95.3 Michiana's News Channel.
Podcasts by Federated Media. Podcasts by Federated Media.